India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning and we're coming to you live as always from the CNBC TV18 Motilal Oswal studios. Yesterday, the markets gave us a bit of not a mini heart attack actually, it was not even that. The market pulled back quite a bit from the day's lowest point and overnight cues are rock solid. Very, very positive cues, which we will detail here in just a bit from now. I'm Prashant, with me my colleagues Nigel and Rima. Guys, good morning.
Hi, good morning. You know, we keep hearing that India is the only game in town, but look at the way the global markets have been rallying, right?
Yeah.
For the S&P 500, it's the 37th record of the year, and we're just halfway through. Nikkei is smashing new records.
Well, that's right. But the Indian markets, you know, they continue to see buy on dips, and that's good news. Even yesterday, in the first half of trade, you would be fearing that we're going to finally see that correction that everyone's talking about, a couple of percentage points or. By the end of the day, everything, a big recovery on the broader markets in particular. You know, though the headline index ended with a cut-off around 100 points, but heartening to see the kind of buy on dips that's taking place.
Absolutely, and I think that's the mantra, buy every dip, and it's worked, so why not? Well, you know, so I think just to begin where we left off yesterday at 3:30, so the Nifty basically failed to see a follow-through from the previous day. And it also broke prior day lows. I mean, essentially the lows which the Nifty had been holding for the last several days. Yesterday, the day's low, I mean, that went and it looked like perhaps, I mean, you'll see a meaningful, more deeper, meaningful pullback. But, well, I don't think that panned out. And by close, things had recovered quite a bit. It's too early to judge if we are in for a bit of a pullback. And I think I'll explain in a little bit. I think, you know, upsides are clear because it's all blue sky because the market's all pretty much at all-time highs. Now it's essentially about a bit of defending. And we'll come to the Nifty levels in just a bit because across the board, you've got an important moving average which is emerging. But before I get to that, I'll just sort of also wrap up the US market session where it's basically new highs. The S&P 500 topped 5,600. It's a new sort of high for the S&P 500, the benchmark index. You also had the Nasdaq. So S&P was up 1, Nasdaq was up about 1.18% on your screens. You had stocks like Nvidia, Apple, some of the largest mega caps in the US, which outperformed the broader market. There was sort of individual stock-specific news flow there as well. But, you know, these are the names which really did very, very well. As far as other, other aspects of the market in the US, the 10-year yield, the bond yield was down a little bit, 2 basis points. Dollar index was down about 0.15. Oil prices creeped up about 0.8. It's not a bad-looking sort of picture out there because, you know, oil's been in this sort of up and down, but not really going anywhere. And yields and dollar both are looking like they really want to come off, but they're not. I mean, for example, the dollar index has been skirting with that 105 levels, but not really breaking that support in a decisive kind of way. So we'll see. And I think what may sort of help us towards doing that may be tonight's US CPI number, and markets will watch the core CPI. So it's the expectations are up on your screen. Once again, about 0.2% month-on-month growth, which translates to about 3.4% year-on-year growth. And I think this is important for markets, for pricing, whether Fed rate cuts are brought forward, whether, you know, we'll have to wait a little longer. But I think that is you know, in terms of data, perhaps the single most important one this week. Okay, let's now talk about the levels here. And I think, as I said, it's a bit of defending because upsides are, we head where we want to go, but the 20-day emerges as an important support on all indices, for the Nifty, for the Bank Nifty, for the mid-cap index, for the small-cap index. So the 20-day for the Nifty is 23,887. And we are not very far away from the from that level. That must be defended in the short term because, you know, a 20-day break has brought about 5-7% corrections in the market in the past, even an uptrending kind of market. So, you know, hopefully that is defended. Nifty Bank is now very close to its own 20-day moving average, which is 51,907. Again, very close, not even a couple of percentage points away. The Nifty mid-cap actually broke the 20-day moving average yesterday at the day's lowest point and then pulled back from there. There was a 1% recovery. So it's tested that and pulled back. The 20-day for the mid-cap index is 55,792. We left off at 56,921. And for the small-cap index, we almost got to the 20-day, which is 18,404. And there we left off at 18,790. So a bit of defending and some stabilization as we head into earnings. And earnings, if you just read through earnings expectation, is going to be a bit of a dull quarter. It's not. There is an earnings slowdown, earnings growth slowdown, which is expected in Q1. We'll get numbers from TCS, Infosys tomorrow, etc., etc. But I'm talking about the overall earnings basis. There is some expectation that momentum will slow a little bit on that front. And of course, we're looking at the budget. Say what you will, there is a lot of anticipation, and not anticipation, but actually a little bit of trepidation whether the government will do something on taxation for equities. So I think that's another hump to get over. In the very, very near term, the GIFT Nifty is showing us a 65 point higher start. Should you chase it right at the word go? I don't think you should. I mean, it would have been much better if you get a bit of a flattish start and then you get to play the upside because US markets, etc., have closed so strong. But this is a 65 point higher start. So more defending than offensive, at least for me, as we begin another session. Rima.
Well, talking about the US market, I think there is one important statement from Jerome Powell which got the street excited because it basically opened the door for a Fed rate cut in September. He's talking about how that the Fed, yes, wants inflation to get back to 2%, but they're not fixated on the number 2%. They're looking at the trend. And this is what he says. You don't want to wait until inflation gets all the way down to 2% before cutting rates, because if you wait that long, you've probably waited too long. There are risks which open up if you wait for too long, and that got the street excited. So yes, they are focused on bringing down the inflation. They're on that path. But I guess the street interpretation is that we could see a Fed rate cut before inflation actually gets to that magic number of 2%. And economists are talking about as early as September. That's the US market picture. It's just smashing records, right? Led by the tech stocks. So yes, there is concern about too much concentration, but Nasdaq is up nearly 25% since the beginning of the year. The S&P 500 too, clocking in a solid return. The picture across Asia is also very, very green. It's Nikkei today, which catches your attention because it surged to a fresh high, crossing the 42,000 mark for the first time ever. But even the other Asia-Pacific markets are higher on the back of greater confidence about that Fed rate cut coming in the subsequent months and the rally that we had in US. GIFT Nifty we spoke about, that's a 60-point higher. For the day, we will watch for TCS earnings. They come out post-market hours. The press conference is scheduled at 5:30, but we understand the results could come closer to about 3:45, 4. Tomorrow, it's HCL Tech, and then Avenue Supermart on Saturday will be on our radar in terms of earnings for today and this week.
Well, that's right. And it's always good when you wake up to positive global cues. So that's a positive in itself. But the three big triggers that I'm looking at for today, on the Nifty, it's the weekly expiry, the options expiry that will play out. So that's point number one. The second factor is we'll be having earnings, the one that already delivered its set of numbers to start Alexei, and I'll dwell a little bit more on that in just a bit. And the one we're looking forward to is TCS. So the tech earnings are going to be important. And post-market, when you're at home and chilling, you'll be looking out for the US CPI data that will be coming out as well. And that will be the mover from a global market perspective. So those are the three big triggers. What about the FIs? Well, on index futures yesterday, we saw a swing factor of close to around 48,000 contracts because the longs were unbound by the FIs and shorts were added. So that's why that swing factor of around 48,000 contracts odd, which takes the short positioning now to around 20%. Remember, from around 15, it's gradually moved to around that 20% odd mark. And in absolute terms, this is moving favorably, actually, because you don't want to see that the FIs are net long to that extent. They almost went to around 4 lakh contracts, which is a record in itself. It's gradually coming down. So that's a positive because now we're down to around 3.4 lakh contracts. I would like to see some more unwinding of long positions. And some shorts in the system always helps the market. What about the clients? Well, there was some covering that they saw in yesterday's trading session. So we've been making this point that the clients that actually have been getting it right, well, they in fact were net short close to around 3 lakh contracts. That's gradually come down to around 2.3 lakh contracts odd. So some reduction on the client short side and some reduction in the FI net long positions as well. So that's the positioning of both those two. What about the range? We're still in that broad range, close to around 500 points, 24,000, 24,500 odd. That's the broad range. And in terms of reference levels, Well, in the last 7 days or so, we have gone twice down to around the 24,150. So that becomes important, both those low points. And from both those two low points, we did see a bit of a bounce. The level you're looking at on the upside is the recent high, which is at around 24,444. The stock that I'm looking at is Tata Elxsi. And it's going to be an interesting mover in today's trading session. Why do I say that? Because the largest vertical, that grew by close to around 5.3% on a constant currency basis on a sequential basis. So that's encouraging. That's the one that has more than 50% of its business and it led growth. The second factor is the adjusted EBIT. Well, that's actually improved, X of the one-offs. So that's positive as well. And the one that everyone knows is that it's valuation-wise not very, very cheap. You have a tailwind of tech doing well overnight. There is some enthusiasm in the tech space here in India as well. And both those two, the growth is encouraging and the adjusted margin is quite good. So I think that could be the stock of the day.
Okay, thank you very much for that. Because transport has done very well, you should also watch for KPIT Tech. Because yes. KPIT Tech plays in the similar place, but it's a pure auto, it caters to the entire auto space. So KPIT Tech and Tata Tech should be the two stocks you should watch on the back of Tata Elxsi's numbers. But let's get to the equity calls then. Rajiv Batra of JP Morgan expects Q1 FY25 earnings to be driven by financial, auto and healthcare, while dragged down by global cyclicals like oil and gas. He says in the near term, our sector allocation remains aligned largely with domestic cyclical plays amid positive earnings momentum, superior economic growth and policy continuity. He remains overweight on financials, auto, real estate, healthcare and industrials for the Q1 earnings season. He also sees two messages that are coming through. One, moderate top-line growth expectation and margin contraction of 24 basis points for the Nifty.
All right, well, let's get you some money market views now. This is Parul Mithil Sinha of Standard Chartered Bank, who says that the rupee has been completely range-bound in a narrow range of between 83.43 to 83.53 to the dollar, driven by lack of domestic triggers and stable USD. US CPI today could likely provide some direction to USD INR pair, and she expects the currency to remain range-bound and trade between 83.4 to 83.65 to the dollar in the coming week.
On the bond, she says the Indian government bond yields were range-bound in the previous week due to lack of domestic triggers, while swaps moved lower in line with global rates. US CPI today and India CPI on Friday is likely to determine further moves in the rate market. The bond market is also closely watching the union budget on the 23rd of July, and they expect the centre to stick to its stated fiscal consolidation path with FY25 fiscal deficit target of 5.1% of GDP. In the coming days, expect the 10-year benchmark yield to trade in a range of 6.95 to 7.05%.
Well, let's get to all the stock-specific action. Then we'll just highlight the top 10 list that we're looking forward to. We get to that in further detail in just a bit. We're looking at Glenmark, Tata Elxsi, JTL Industries, IRB Infra, PDC Industries, Shalbeam and Zydus Life. All of them will be reacting to positive news flow, while we have Glenmark Life, Sula Vineyards and G Power that will be reacting to negative news flow.